In this video, I'm going to show you what happens when you're using the AutoTrend system and the market is going sideways. The ATS is very good at avoiding a lot of choppy action, but not all of it. You will get mixed signals sometimes, and you'll get signals that don't produce a trend, and that's normal. And we have rules to deal with that so that when it happens, we either avoid a bad signal or we keep our losses very, very small until the market comes out of the sideways action and starts trending again. Everything we do with the AutoTrend system is very systematic, so the way we deal with choppy action is also rules-based, so you'll never have to guess what to do. So I've pulled up here an example of Apple on the 30 minutes chart, and as you can see, we are getting some mixed signals with the AutoTrend system. At first glance, this may look scary, right? You see all these mixed signals. The ATS is telling us to go short, then long, short, long, short, long for quite a while until we catch a long sustained trend to the downside. And at first glance, as I said, it looks scary, right? You might assume that you're gonna get a lot of losses here. You're gonna get chopped off, and you're gonna rack up those losses until you make it all back in a larger trend. But that's actually not necessarily true, because we do have rules that can help us either avoid a lot of these signals altogether or minimize the losses when we enter a trade following an ATS signal and it ends up not going anywhere. So let's go over these rules together here in this video, so you'll see what I mean and it will become very clear. So let's get it. We'll start with, we'll do each trade, right? We'll do each signal and how we would have reacted to each one of those signals. Okay, so let's start here. We get a short signal from the ATS, right? It changes from blue to red, and that's our signal that the ATS is now detecting a potential move lower, right? This is the signal here. This is the signal bar. This is the bar that created this trend change. As soon as this bar closed, this is a red bar. So it opened at the highs and closed here, right? Or rather, it opened here at the start of the full body and it closed here at the end of the full body. And the wicks signify where price reached on the high and on the low, but it closed here. As soon as it closed here, our signal from the ATS to go short is confirmed. If you're having alerts enabled, you will have gotten a sound alert or a notification on your phone telling you that the AutoTrend system has detected a trend change. Right, so that's your signal. That doesn't mean that you have an entry. According to the rules of the 4 strategies that we're using with the AutoTrend system, according to the rules, in order for us to have a trade, we need to see confirmation by the price action before we can open a position. That confirmation is, we need to see the lows of the signal bar, in other words, the bar that created the trend change. We need to see its lows being overtaken by a next bar. So as soon as this bar closes, we monitor the price action for the next bar or one of the next bars to come down and break below the low of the signal bar. This is the low of the signal bar here. Right? So this dashed line signifies the low of this signal bar. As you can see, none of the next bars came down to break below that low. Therefore, even though we did have a signal by the ATS to go short, we didn't have confirmation by the price action. Therefore, we don't have a trade. This was an avoided trade, right? We avoided getting short here and stopping out because of this very important rule that we have, the confirmation rule. Yes, we did get a signal, but a signal doesn't mean a trade, doesn't always mean a trade, it means a trade. We need a confirmation. And in this case, we didn't have it, right? So that's the first trade that we can track here. Actually, we don't have a trade. We have a signal, but we don't have a trade. Then we get another trend change by the ATS. You can see the ATS changed from red to blue. This is the signal bar. This is the bar that created the trend change. And again, we need to see the same thing, right? We need to see confirmation by price action before we can have a trade. It's exactly the same as with a short, but everything reversed. Since this is a signal bar, for us to have a trade, we need to see its high. So the high of the signal bar right here, we need to see this high being broken above by the next or any of the next bars if we're still blue, right? If we don't have a trend change first. And as you can see, that didn't happen here either. The next bar did not break above this signal bar. This is the signal bar. This bar didn't go above it. This one didn't. This one didn't. And this one has created a new trend change. You see that the bars from the ATS changed from blue to red. At that point, we're not looking for a trade to the upside anymore because now the ATS has turned red, right? So we didn't get a trade here, we didn't get a trade here, even though we did have two signals by the ATS to first go short and then go long. But according to our rules, by following the rules of our strategies, we stayed out of both of those trades, avoiding two losers there, right? So that's what I meant by, yes, the ATS does give us signals, but it's not always that we act on those signals and we take a trade. So sometimes it will give us sideways signals, but the price will not confirm those signals. So we will not have a trade. So we will have avoided those potentially bad trades. Okay, so let's continue with our example. What happens next is we get another short signal here. Right here, the bars change from blue to red. This is the signal bar, this small little bar. Let's zoom in here so you can really see it. So right now we're going bar by bar, right? So you can really understand the rules behind this. So this is the signal bar. This is the bar that created this trend change here, right? So again, we're following the rules. If the low of this bar is broken below the next or any of the next bars while we're still red from the ATS, then we can enter short. So this is the low of this bar. And as you can see, the next bar did come below and it broke below this low here, right? So at that point, we will have a trade. We would have been triggered short following the signal from the ATS and confirmation by price. So let's go ahead and mark our entry. So our entry is here. The stop loss needs to go just above the last swing high before this trend change. The last swing high is just above here, right? So just above here, I would have placed it just a few cents above the swing high, not just at the swing high, but a few cents above it, right? So that's our initial stop loss right there. Okay, so targeting obviously the dynamic profit levels. We're not going to talk about targets in this video because we are focusing specifically on what to do when trades go wrong. In other words, what to do when we get into choppy sideways action. So, okay, that's our initial stop loss. Our target, let's say it's somewhere down there. Obviously, it's not going to be triggered. As you can see, this trade will be stopped out because we do come here and we have a new trend change. According to the rules of the strategy, we need to exit our position if one of these two things happen. Either number one, we get a new trend change by the AutoTrend system, or if our hard protective stop loss is hit. So whatever happens first will get us out of the trade. What happens here, it's hard to see because we don't know. Actually, yeah, we do know. Our full stop loss would have been hit here because this candle, this red candle, did come and break above our stop loss, or it triggered our stop loss before this candle closed, giving us our new trend change, right? So in this case, this trade would have resulted in a full stop loss. So whatever our risk was, whatever we were risking, let's say 1% of our account or 0.5%, we would have lost on that trade with our full stop loss. And that will happen, although it is quite rare. I wouldn't say rare, but it's certainly it happens less often than not, right? And you're gonna see why that is in the next trade that we're going to simulate. So yes, in this case, we did have one full stop loss here. So I'm just gonna leave this on the chart, signifying that we did have our full stop loss here. Okay, next, let's continue with our examples. Then we get another trend change to the upside. You see this blue bar? This blue bar was created by this signal bar, the same bar that stopped us out of our short trade here. So as you know by now, in order for us to have a trade, we need to see the highs of the signal bar being overtaken by a next bar. These are the highs of the signal bar, the high of the bar. Obviously, none of the next bars came all the way up and breached those highs. Therefore, we don't have confirmation to follow this AutoTrend system signal and go long. We don't have confirmation, so we don't have a trade, okay? So we're avoiding another bad trade here. Let's continue. Then we get a short signal. Again, here, you see this is the signal. We changed bars from blue to red. This is the signal bar. For us to have a trade, we need to see the lows of the signal bar. So these lows here, we need to see those lows being broken below by a next bar. Obviously, that didn't happen again. So once again, we don't have confirmation by price to go short. So we are saved from a fourth losing trade, right? We're saved from this bad signal, this one, and now this one, because in all of these examples, we didn't get confirmation. We only got confirmation on one trade, which resulted in a loss, as opposed to 5 losing trades here, right? So continue with our example. This is the next trend change here. This blue bar here is the next trend change. And again, in order for us to have confirmation to go long, we need to see the high of this bar being overtaken by a next bar. This is the high. As you can see, it did not get triggered, so it didn't get breached by any of the next bars, so we do not have a trade to go long. We don't have confirmation to take a long trade here. So that is the 5th time that we are saved from a bad trade. So from all of these signals, we got 1, 2, 3, 4, 5, 6 signals, 6 sideways signals, and we ended up getting into one losing trade as opposed to 6 different ones. So that's what I meant by what will happen often is that we will get signals, but we will not get confirmation by the AutoTrend system. Okay, let's continue with our examples. We have another trend change here, this time to the short side. The bars change from blue to red. For us to have a trade, let me just go ahead and remove those lines. We don't need them anymore. For us to have a short trade here, we need to see the lows of the signal bar, the bar that created the trend change. We need to see its lows being broken below by a next bar. This is the bar. If I really zoom in, you will see it. You can see here. This is the bar that broke below these lows. So in this case, we are triggered short, right? We are triggered short and we can go short at that point. So let's go ahead and mark it right here. Our stop loss needs to go just above the last swing high before the trend change. This was the last swing high here, right? This was the last swing high. So I'm gonna go ahead and place my stop loss, my original stop loss, all the way up there. And we will then see how the trade develops. So, but that's my protective stop loss. If anything happens, whatever happens, I have my risk set up. So I'm not gonna lose more than what I intend to lose. And that risk can be, again, 1% of your account, 0.5%, more, less, depending on your risk tolerance and your preferences, right? But then look what happens. That's where it gets interesting. What happens next is we get a trend change by the ATS here, a trend change long. So far we were short, we're having red bars, and now we have a blue bar. At the close of this bar, at the close of the signal bar, the trend change is confirmed. The ATS has turned blue. And according to our rules, if we are in a short trade, if we had followed a short alert by the ATS, and now we get a long signal by the ATS, then we have to close our previous trade, our short trade, because we now are in a long signal. The close of the signal bar is here. So as soon as this bar closed, we need to exit our short position here. We need to exit that position before our stop loss is triggered. So as you can see, originally my stop loss was up here, but I end up closing my trade. Here, right? So that's something like 0.4. If we measure our risk as 1 risk to reward ratio, so like 1R, we end up taking 40% or 0.4 R on this trade. So instead of losing 100% of our position of our trade, we end up losing 40% of that trade. So we're not taking a full stop loss. We're taking 40% of our stop loss because we did receive a trend change from the AutoTrend system here. And that's what I meant by the AutoTrend system, and the rules that we have developed over time help us either avoid losing trades altogether or reduce our losses significantly by following these rules and by following the AutoTrend system's signals. The first stop loss that we enter with is our protective stop loss. It's there as insurance, basically. Whatever happens, we know that we cannot lose more than that amount of money. But if we do get a signal by the ATS before our stop loss is hit, then we will follow that signal to exit faster or sooner before our full stop loss is hit. So in this case, we were risking this amount, all of this, and we ended up losing only this, right? So that's much less. We have saved a lot of capital by doing that, basically cutting our stop loss from 100% to 40% in this case, right? So I'm gonna leave this trade here, so we can keep track of things. And let's continue. Then we get the signal that caused us to exit our short position is obviously a long signal, so we can follow that signal as well. And if it results in a trade, obviously it doesn't, because the high of the signal bar, this is the signal bar, the high of the signal bar again is not breached by a next bar, right? It is not breached by a next bar in this case. So we don't have a trade here. We are spared from another losing trade. We then get another short signal here. Another short signal here. Obviously, the low of the short signal is overtaken by a next bar. So the next bar comes below and breaks below the lows of the signal bar, triggering us to a short trade, right? So our entry is here. Our stop loss needs to go again above the last swing high before the trend change, which is up here. That's our protective stop loss. It's there to protect us from quick moves up and down. But if we do get a signal by the ATS to exit sooner, we will do that. And as you can see, it's very small. It's very subtle, but it's still there. That's still a valid signal long by the ATS, right? I'm not hiding any losing trades here. This is just a random example that I found, right? This is literal. This is real trading as it happens, right? You will get losing trades. You will get into choppy action. And that's what the rules are there for. They're there to protect you and to minimize losers and maximize winners. So what happens here is the ATS gives us a long signal. And according to our rules, if that happens and we're already in a short trade, at that point we need to cover our short trade. We need to exit for a small loss, which is exactly what happens. Our original stop loss is up here, but since the signal bar closes here, right? This is a blue bar, this is a bullish bar, so it closes here, right? Closes right here. So at that point, we need to exit our losing trade. So this is our actual stop loss. This was our projected stop loss up here. This is how we started the trade. Here we were risking 1%, let's say, of our account, but we end up taking a 0.5% loss or something like 0.45% instead. Exactly the same thing as happened here. We were risking 1%, we were risking this, and we ended up taking a 0.4% losing trade on this one. Exactly the same as in this one. So once again, the rules have kept us safe from further losses. And let's continue. We have another trend change here. It's time to the short side, right? If the lows of the signal bar is overtaken by the next bar, we will be triggered short, which is exactly what happens here. So let's go ahead and place our trade. This is our trade. Again, the stop loss needs to go just above the last swing high before the trend change, before the signal to go short. So just above here, and then we can track the trade and see how it develops. So following our short trade, we can see that this one did result in a nice downtrend lower from that point on. So this was the choppy action, and we managed it as best as we could using a combination of our rules and the alerts by the AutoTrend system. And obviously, after we came out of the sideways action, the trend worked very, very nicely and started hitting our profit levels, at which point we would have started taking profits and scaling out of our winning trade in partials, trying to maximize the trade as much as possible. Obviously, targeting and all of that is not a topic of this video. I just want to show you how we can either avoid completely sideways trades or minimize the losses when we inevitably will get into some of those choppy trades that go back and forth. And the ATS and the rules that we have developed are very, very good at, as I said, either avoiding those trades altogether or minimizing the losses. As you can see here, we avoided 5 or 6 trades. I kind of lost count. We avoided 5 or 6 bad signals here. We ended up getting into 3 of them, and in 2 of them, we took less than half of our original stop losses. So instead of losing 1% on each trade, we ended up losing 0.4% and 0.45% here, I think, right? So that's exactly what I mean when I say that by using the AutoTrend system and using the systematic rules that we have developed for it, what ends up happening is we are minimizing our losing trades while maximizing our winning trades, letting our winning trades run for as long as possible, while when we do get into those inevitable losing trades, we do the best we can to minimize those losses as much as possible, minimize our expenses, and then let our profits run when the market eventually turns into a sustained trend to the upside or to the downside in this case. And by the way, what we went over this video is really a worst case scenario, right? So I picked an example that had a lot of back and forth signals to really show you how you can trade that in the worst case possible. Most of the time, you're not going to get so many back and forth signals. You may get 1 or 2 or 3 or maybe even 4, but it's quite rare that you're going to get so many back and forth signals. Yes, it can happen, obviously, as we saw in this video, as we've seen in this video, but it is rare, and I didn't want to sugarcoat anything, and I wanted to really give you a realistic example of, okay, what is the worst thing that can happen when I follow a system like this, when I follow the AutoTrend system? What's the worst thing that can happen? What are the worst trades that it can get me in? And this is that type of example. Sometimes you will get a lot of back and forth signals, but most of the time you will get maybe 1, 2, 3, or even 4 of them. And by following the rules, you can get out of this situation with as minimal damage as possible. So I hope this video helped kind of explain these different signals that you will find with the AutoTrend system, and gives you a better idea of how we use our systematic rules to trade with it and do it very, very successfully. So yeah, I think that's it. Thank you for watching, and if you found this video helpful, let me know in the comments below, and subscribe for more content like this about the AutoTrend system and the system levels strategies that we are trading with. So yeah, thanks for watching, and take care.